Good everyone, Les here from BG Trading. I hope you had a fantastic Christmas. Today is 27th of December 2023. The year is almost ending. And we're going to be analyzing some of the stocks that you have chosen for us on our free Facebook community, Buy, Grow, and Sell Strategy for share traders. Every once in a while, we post to our members on this community the opportunity to bring some stocks they think could have a potential for 20 to 40% bounce within 1 to 3 month time. So we pick up the best ones and we analyze them on this channel. So the two stocks that we're going to be analyzing today is KAROON Energy, stock chosen by Kim, and also WOODSIDE Energy, stock chosen by Chris. Both are oil and gas stocks or energy stocks, and both of them are trading at technically discounted price. So let's dive into this and understanding whether there is potential based on a macroeconomic situation moving forwards to 2024, if there is potential for oil stocks to bounce and reach 20%. I'm also going to be looking to the S&P ASX 200 at the beginning of this video, just to brief go through what's been happening over the last month, where the market has rallied about 12%, impressive 12%. And my expectation whether we should maybe just be cautioned about potential correction or we could see further upside through January. So we're going to be covering this on this video. So let's have a look. I just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell with stocks, how we set up targets, stop losses, how we avoid FOMO, and much more. I'd like to invite you to become a member of our free Facebook community, Buy, Grow, and Sell Strategy for share traders. That's where we're picking up those stocks chosen by our members. And in this community, we post a lot of great quality content, including some offers, including some of our fantastic results that we've been recently taking with this latest rally, with SAYONA, for example, going above 100%. It's actually up to 109% today. One of our best trades at BG Trading. Really looking to potentially close our position on SAYONA. Then we had SIP, we had Northern Star, we had many other stocks anyway. Most of them exceeding 20% threshold, which is what we are doing with our VIP members here at this at BG Trading, and also what we do with you guys in this community as well. Now, let's jump straight into S&P ASX 200 and see what's happening with the overall index. If you look at this chart formation, we have reached a very close to a very, very specific area, an area with a high supply here, or an area that we could bring a lot of sellers right there. We call the hypothetical resistance level, which is at the top every time the market or a specific share hits that particular level, and that brings a lot more sellers into place. The problem with this one is generally when we think we have risen enough, things end up going a lot further. We haven't seen any signs of reversal, and that's the big reason why we think we should just stick with a long position for now until we see the first signs of reversal. The first signs of reversal in this case will be indicated as a red candle on a Heikinat chart, just like you can see right here. Okay, I don't know what happened here. Just a second, guys. Okay, let's take a look. What are the channels that we could possibly see the markets moving towards next few months? So here you go. So we not long ago, just in end of October and beginning of November, we are just be sitting about 6,800. Everyone was very scared. People talking about a further market crash, and all of a sudden the market bounced back on the back of potential interest rates cut. Now, one interest rate cut in March has been priced in. Now, question is, could we see further interest rates cut in US? This is US. This is about by Fed. Okay, I'm not talking about RBA here. Could we see another interest rate cut as well? And could we see the confirmation in March? So that's what the market has been priced in. Now, what happens is, if eventually that doesn't happen, then we might have a correction very, very soon. So I'm expecting a correction in some stage in January. We could see a breakout here. Yes, we could. But I'm actually searching for the first signs or reversal. We had 12% rally right here in 1 month. Let's take a look before, what's happening before. So 13% rally in October last year. Then we had 10% rally there. So I want to see every time we had about 10 to 12% rally, what happened next. That's what we're going to exploit right here. And it's sensible to think that we're going to have a correction very, very soon. So every time we had 12% or more rally, we had about, first one, we had 8% correction. Then right here, we had 9% correction, and right here, let's take a look at this, 9% up with a 8.5% correction. So 12% rise, we could bring at least a 7% correction. If that happens, we would see potentially a lot of stocks that people are buying right now reaching the stop loss. You gotta be nimble on this. Maybe just start locking profits and wait for the next correction. That's what I think it is. And if it's ever a time to look into shorting the market, would it be in the next sign of reversal, which could be around the corner. We might see that in early January, because remember, the market's 1% today, but we are trading at very, very low volumes. This is a holiday season. Nobody really trading, so this is not real. It's not a real trade movement. So 1% not real. We could see another 1% tomorrow potentially, or another 1% rally until Friday. So very, very cautioned about the index right now. I would be looking potentially hedging against a fall. There is ways to hedge the market. One of the most common ways that we do here in our community is buying BBOs, which is a beta share that replicates the opposite movement of the market. So if the market start falling, then a BBOs will start going up. If you look into BBOs right now, it's trading at really low levels, and if the market really falls about 7% as a correction, we might see 15% pull up on BBOs, offering a very interesting opportunity right here. Take a look. No signs of reversal yet, but as soon as we see a sign of reversal, I think it's a time to look into that in order to hedge from potential positions that we might be holding during the downturn, or maybe even some stop losses if buying stocks, attempting to buy stocks that are not trading at buying area, which is where we buy normally here at BG Trading. Now let's start with this first stock. We're gonna start with KAROON Energy, which is the SX code is KAR. Okay, so this is a really nice stock. It's a trading stock for us. I'm not gonna dive into fundamentals because we don't have much time here. But one thing I notice here is that we have reached very, very high volumes right here at this bottom, which suggests that we may attract a lot of buyers in the recent time. Let's take a look on the RSI here. The RSI doesn't look very promising. It's suggesting that we might see another leg down right here. I would say the safest way to buy this stock now is if we have a double bottom right here after this 40% fall on the stock price. So some people asked me, when the stock was reaching about $2.60, was asking me, should we buy this? And I said, okay, I can't say if you should buy or not, but I will tell you this: stock's trading at technically formal level. It's a formal level. We shouldn't be buying at formal level, and didn't happen otherwise. What happened is the stock fell about 40%. Mostly generated of buy oil prices slump. Actually 30%, sorry, I've just exaggerated a little bit. Okay, but anyway, if you're looking to buy now, that would be the time around this sort of level. But be prepared for a potential 10% correction if we have what we call double bottom right here. We could see something like this happening before moving upwards. So A, B, C, and then we could see potentially another fall depending on oil prices. If you look into oil prices right now, see there is a little bit bounce. The stocks are replicating what oil price is doing essentially. Question is, with potential recession in US, is there room for oil to move upwards, or we could see oil testing under $70 again? Very hard to predict oil prices, to be honest, but generally when recession hits, then energy prices tend to go down with low production. Anyway, I'll let you think, but anyway, regardless, this is if I was going to buy KAR, KAROON Energy, I would be looking for point C, target C here, once again around $1.80. Even under $1.90 looks appealing because we might have a higher low here and a potential reversal. So I think looks reasonably safe to say that under $1.90 KAROON Energy looks appealing. The stock doesn't pay any dividends. It's being net profitable. Revenue increasing as production increases. The company has been boosting production every single quarter except on June quarter 2023 as because some gas leaking, but overall has been improving, has been a pretty good winner on the energy sector. PE ratio is still very low, just under 5. So you want to stick with stocks, buying stocks that has low PE ratio. The company doesn't pay dividends, just keep that in mind. So if you're going to compare Woodside Energy to KAROON Energy, is a completely different thing, although they are in the same sector. Okay, Woodside is a way more established company. The production cost is hugely lower than KAROON Energy per barrel, and also you got to think about Woodside pays dividend. So let's start with Woodside now, Woodside Energy, and see what's happening. And a lot of people are going to ask, what do I think about Santos and Woodside merge? And I have to tell you this, I have no idea because I haven't seen any proposal yet. This is still media speculation. We don't know exactly what's going to happen. And I have no idea what is being proposed or what's going to be proposed, if anything going to be proposed. So rather than rather than trade on speculation that those stocks could go up or down because of the merge, I think we really need to think about is stick with the what's happening with the fundamentals, what happened with the macroeconomics and the chart formation, buying the stock at technically discounted price. So with Woodside WTS, you can see it's still in ascendant trend formation right there. So as you can see here, it has recently sort of reached this bottom of this ascendant channel right there, which shows to be a very interesting buying area for Woodside. But again, if we see further decline on oil prices as a result of potential recession, then we could see once again the stock price testing this 29, just under $30 level. Ideally, I would love to be able to buy Woodside around $28 at this long-term hypothetical support level. Whether that's going to happen, I don't know. But I think under $30 according to the current macroeconomic and the chart formation, I think is a pretty good value if you can buy under $30 for a 20% trade. I wouldn't chase much more than 20% trade with Woodside. However, we still, if eventually oil prices go really high for any particular reason, we could see, and we see Woodside around $39 again, buying now would give 25% range. But I would only chase for 20% on this particular stock just because it's a large cap and they don't generally move the way small caps would move. So if you're going to be chasing more than 20%, go with KAROON Energy because that will swing much wider. Let's go again, take a look at this, just in comparison, KAR. You see, let's take a look, just measuring this, potential swing, give us 30% on the top of the range again. So looks very appealing. But I still skeptical about energy stocks. So we'll be looking at potentially, if you want to try buying this, I would be trying at the double bottom, potential double bottom. Maybe never happens, but you know, that's what the chart looks, chart formation looks to me. So it's still, if you're going to look into the fundamentals a little bit, Woodside pays dividend. It's a investment grade stock and has been obviously improving its profit for the last 3 financial year. Revenue increasing as well as production increase has been Woodside had recently bought into BHP energy assets, and that obviously will be bringing a lot more return to the investor in terms of dividends, so that we're expecting the company to maintain its yield as it is at the moment or higher despite lower oil prices. P/E ratio about 6 in comparison to KAROON, which is almost 5. So Woodside looks pretty cheap here, to be honest, in comparison, and a way much higher quality business as well, lower risk. So hope that was valuable for you. I'm doing a high level analysis obviously, and showing the points which I would be buying here. So I'll be buying Woodside, just to wrap it up, under $30. Looks appealing for me at the moment. I probably would say I would hold until, although it's still trading at technically discounted price. Both stocks are trading at technically discounted price, but I would hold to see the stock potentially going under $30 and then buy under $30. That's my personal opinion on those particular stocks. Okay, we might have a market correction around the corner, so maybe in January could be the month to buy Woodside and KAROON Energy altogether. Thank you very much, guys, for watching. Have a fantastic new year if I don't record any video before the new year. And I'll see you in the next video. Bye.